today's programming, we're going to be focusing on strategies for investing in Africa and how those strategies are actually being executed. On the panel today, we are joined by Bronwyn. He is the Managing Director of Tata Africa Holdings. We've got Henry Obi. He's from the Helios Investment Partners, and he is the COO. Dapu Okobadejo is Africa M&A and Transactions Advisory Team for KPMG Nigeria, and Tim Bashel, Head of Strategy for KPMG Africa. Thank you very much for joining me on the panel this afternoon, gentlemen. Tim, let's kick off with you in terms of the main drivers you are seeing for investment decisions being made on the African continent.
Thanks, Bronwyn. I think when you start any strategic investment type conversation, you need to get into the headset of a CEO of a global corporation. And whether that CEO is coming from no growth, low growth countries like in Europe and North America or Japan, or whether they're coming from high growth economies of Brazil, China, India, Indonesia, they're all saying to each other, what is our high growth market strategy? So when we talk about investing in Africa, we need to understand Africa is in a context of other high growth market strategies, and that Africa has been seen not only by the low growth, no growth nations as an opportunity, but clearly by the high growth nations like India and China as well. So when we talk the conversation around investing in Africa, we need to understand that the conversations go around three megatrends. The first megatrend everyone knows about, and that's the natural resources game, which is the mining, oil and gas, and more so agriculture as being big investment area opportunities. The second part of that is the billion people who are very young and are rapidly urbanizing and are responding to the growth opportunity created by the natural resources environment. And that's creating a massive middle class who have money to spend. And as a result, the consumer demand is massive. And that affects telcos, affects banks, insurance companies, retail organizations, food and distribution companies. And that sector, consumer demand side of things, is just huge change. And the third part is that with the natural resources and this massive consumer demand goes an infrastructure play. So there's a great need for big investment into power, into transport, whether it be road, rail, ports, airports, to respond to the needs of the natural resources demand and the consumer demand.
Tim, I think you've perfectly set the stage for us to investigate each of those sectors throughout this conversation, look at the opportunities and the challenges. I'm going to turn my attention to Raman at this stage. And you spoke about the high growth markets like India and China looking to invest in Africa. What are the merits of investing in Africa over the likes of India, which is growing so fast anyway?
Well, in our case, we took a conscious decision to come into Africa because we needed to go and export. And this we started almost more than 2 decades ago. And so our strategy has been in 3 phases. The first phase was to go to Africa. We divide Africa into 2. One is South Africa and the other is Africa. So we entered Africa first, and we looked at it not just as an opportunistic approach, but we said we're going to take a very long-term approach. And we built a good footprint in Africa through that. And basically, in the beginning, it was just bringing in our automobiles, because that was just the product which India could really export. India itself was a nation which was just getting onto its feet. But then once South Africa opened its doors, there was a big shift in our strategy. And that's when we came into South Africa, because earlier, the doors were not open for us. And once those opened, we tried to look at areas which were either untapped in South Africa or probably were not well served. And so those are the areas which we chose and those sectors we chose. And one of the examples is telecommunications. And we went headlong into a second fixed line in South Africa. That's just an example to say. So in that, we've got quite a few sectors. I don't know if you know that the Tata Group is very, very diversified group. It sometimes becomes difficult for me to explain the group to people who don't know the group.
Well, let's start with the telecommunications aspect, because, Henry, there are a number of people out there who feel that telecommunications specifically in South Africa and on the continent, is relatively saturated. Is that a fair comment?
I wouldn't say so. I mean, telecoms is saturated to a certain extent in certain markets, but there's still the penetration to the hinterland in Africa. You know, you've done the coastal areas, the large urban areas, but there's a large swathe of Africans that live in the rural areas. Now, how do you get to the rural customer? That involves, as you know, a lot of capex spend in building out that infrastructure. We've taken the opportunity of seeing the opportunity within the telecom space where telecom providers don't need to roll out their infrastructure. They can give that to someone else to do and to spend the money better. Money's better spent on content and providing a better service to the customers. So in 2006, we launched a telecom towers co-location business, which essentially builds telecom towers and leases it back to leases space on the telecom sites on the towers back to the telecom companies. And that model's been proved successful in Nigeria, and we've replicated the same model across Africa, creating a company called Helios Towers Africa.
I know you've got a stat you want to share with me in terms of telco penetration.
It's a stat in the sense that, you know, at the turn of the century, there are only 11 million cell phone users in Africa, and we've now reached 400 million. So to say it's saturated when there are 1 billion people and we're going to be growing to 2 billion by 2050 is not appropriate. And I think the key message of this rapid, it's something like 36% per annum growth rate in the telco industry, is that this is the consumer demand wave that actually everyone's getting on the back of, because it leads to all sorts of other consumer demand opportunities in banking and insurance, in the retail sector. And just the intellectual savvy of the users of the phone gives them great access to knowledge and information. So you get the growing capability of the African population.
Absolutely.
Dapo, with this huge inflow of foreign direct investment, there's obviously a move to clean up the business environment across the African continent. Now, I know you can't paint Africa with one brush. You've got to look at each of the 55 countries in separation. They've each got their own challenges. Absolutely. But do you think there is really a concerted effort to tidy up the business environments? Could you generalize to that effect?
Yeah, I mean, what we've seen generally is that, yes, when you look at Africa, you know, you're perfectly right. You can't paint it with one brush. But over time, we've seen increasing political stability in Africa. We've also seen even public sector reforms, even in terms of governance. And, you know, yes, there's still corruption, there's still bribery, but we've seen that a lot of African governments and even the private sector are getting more interested, because it is a landscape that you create, you know, that's where you are going to play. You know, if I go back to the example of Telecoms, for instance, you know, with that size of the population of just about 1 billion people in 55 countries, you would see that even though people think that voice is saturated, but there's still huge opportunities in data. You also see quite a lot of investments coming in through, you know, submarine cables, you know, and then there's still lots of opportunities in the last mile, you know, because as you're, you know, you bring those cables to the gateway, you've got to be able to take it all around. And then we're seeing increasing technology applications from telecommunications, which is leveraging on the size of the consumer demand that we see.
I want to jump now to oil and gas and the opportunities in that environment that we're seeing. Henry, thoughts? Is this the way forward for investing in Africa?
Well, I'm not too sure, you know, that there are other spaces within which you can invest, but we've decided, we've looked at the oil and gas space and we think it's extremely promising, both upstream and downstream. And last year we acquired all Shell's downstream assets in Africa, because we look at sectors that are focused on the core of the economy, where, you know, a large swathe of the population, as they grow in terms of their aspirations to join the middle class, what they aspire to are cars, and cars would need petrol. And because of the poor infrastructure in a lot of the countries, you get logged traffic jams and then more consumer of petrol, you know. So in a sense, you know, that space looks very interesting, all through the value chain in terms of the oil and gas value chain, whether it's midstream, where you can fertilizer plants, or petrochemical plants, or even upstream, where the cost of production of oil and producing a barrel in Africa is about $10 or more, and the cost of oil and the barrel of oil currently is about $100 a barrel. So it makes great sense to play that space as well.
Roman, you spoke about how diversified Tata is. Any opportunities in the oil and gas sector for you, or you're not going that far into the diversification space?
I don't think directly we would be investing into gas, but we're looking at that because Africa, as has been pointed out, is becoming very rich in both oil and gas. But what we have really identified is to produce power out of gas, and that's an area which we are looking. In fact, you must have recently seen that we've just launched a company with Exaro, and I think one of the areas that we'll look at is that in terms of producing power out of the gas.
Tim, is this a hotspot? Dapper, sorry, you want to jump in there?
I just want to say that when you look at oil and gas or natural resources generally, that's really the foundation of the investments in Africa. What we're seeing in terms of trends is that you've seen massive discoveries, in East Africa, and a lot of oil and gas companies are really investing their gas reserves, huge one there. We've also seen, even in countries like Nigeria, they're currently, producing about 2.4 million barrels of oil per day. There's a change in the regulatory framework. There's a proposed change in the regulatory framework that is actually looking entirely, with respect to the ownership of those oil and gas investments. And, and what we're seeing is since last year, a lot of the oil and gas companies are also taking a look at their portfolio and divesting. For instance, Shell divested, and actually sold 4 blocks last year worth about 1.5 billion barrels. There's an increasing linkage as well to, using the non-associated and the associated gas for power generation. When you look at Africa, only 20% of Africa population is actually has direct link to electricity. So, the huge opportunities, even in renewables, solar power, wind power, geothermal, and all of that are things that are new areas of investments, that are actually, opening up in Africa right now due to these changes and trends that we're seeing.
And Tim, you're seeing a lot of activity mirroring, obviously, what Dapper is saying there in oil and gas as well.
Yeah, very much so. I mean, I guess it started in the Gulf of Guinea, which is purported to be 13% of the global supply now. In 2013, that's the estimate. And diversification away from the Arab nations is very important to a lot of the global powers. But what that's led to is a mindset of very long-term investment. So now all these gas discoveries in southern and central and eastern Africa, I think everyone's now looking and recognizing what was in the mining sector before, which is very long-term in nature in terms of investment, likewise in oil and gas. And so when you look at the Africa story, and it's an important perspective around this political uncertainty, regulatory regime, policy certainty. It's around 15, 20-year investments cycles, and that's where a lot of the debate and discussion is being had.
Looking at the Africa story, the Walmart Massmart transaction is certainly going to shape that story going forward. Looking at consumer-related industries, that also has to be a big trend, just given the sheer volume of people on the, I don't know if you can use that term, that's a bit clumsy, but the sheer number of people on the continent.
Yeah, I do agree with you, and it's one area that we were focusing within Helios, looking at the fast-moving consumer goods space. It is a very lucrative area, and given that the growing middle class and these, they need to look at, consumer goods, edibles, durables, you name it, and I think there's a mass market for that in Africa.
Yeah.
Where is the mass market specifically in Africa at the moment? Where are the hot spots from a people destination perspective?
South Africa is one, which we all know, and Nigeria is the other. We're looking at whole of West Africa as something which is going to be a very big market.
Why not East Africa?
East Africa, yes, but it's not really as big as West. West has much more potential, that's what we feel. But we are present in both East and West Africa ourselves. So we look at both the markets, but when you say really big market, in fact, it's got a critical mass. and because that is one challenge in Africa. The markets are very small when it comes to manufacture. And wherever I go, the leadership always asks me, what are you going to do locally here? What are you going to manufacture? And the big problem is the volumes are not there because each country is separate. And so that's where I think Nigeria has got great potential.
But I think East Africa, you take it as a regional play rather than a country-by-country play, and there's a lot more integration in East Africa than West Africa per se.
Is there a level of saturation in East Africa?
I wouldn't think so, not at all.
You want to add to that, Dapo?
Yeah, I mean, basically, I think, a very good example to the point that is made is, the emerging trend in the consumer demand that we see is that, the scale economies and the critical mass, very, very critical. The aspiration of an average African, to gravitate towards the middle class is actually what is driving this. And I think the reason why this is so interesting is that it's got a broad spectrum of sectors that is kind of affect. You talk about financial services, for instance, in the application of mobile technology to engendering financial inclusion or banking penetration. We've seen even in Kenya where this is done so well, from just about 2.5 million banking customers, to now about 14.5. Same for Nigeria as well. Nigeria, we've got about 25 million people, formal banking customers. Even if you say that the addressable market in Nigeria is about 50% of the population, that's 85 million people. Take a look at the gap, 60 million people to be served. That's in financial services. Now you also see retail as well, ShopRite basically made an announcement earlier in the year saying that Nigeria has a capacity for 700 stores, right? So you've just got to see all of this and feel that, and I think why the emerging middle class population is a little bit understated in Africa is the size of the informal sector. So you're not really seeing the true big picture there. But if you look at it from a holistic perspective, there's a huge opportunity, a significant unmet demand, and once certain things are put in place, that's a huge opportunity to tap.
You want to add before we move on to the risks, because we are talking about the opportunities here, and we need to touch on the risks.
I mean, a very high-level assessment of the opportunity around Africa is, clearly there are some 100 million people plus countries, and they in themselves are really worth looking at. But there are a lot of countries that are in the 10 to 20 million bracket, which in themselves don't have the volume, which is what you're speaking about. And there are a lot of countries in this sort of 35 to 50 million, which is worth looking at. And if you take North Africa, it's about 20% of the people, but it's got 30% of the GDP. South Africa, or Southern Africa has got 30% of the people and 30% of the GDP. East Africa's only got, I think it's 25% of the people, but it's only got 15% of the GDP, big upside. And likewise in West Africa, if you take Nigeria and the Francophone countries, they've got 40% of the people and only 15% of the GDP, 20% of the GDP.
We've spoken hugely about the opportunities, and I need to take cognizance of the risks that come with investing in Africa. What have you seen on the ground, so to speak?
Before I answer you on that, I would still like to stay on the opportunity. One of the opportunities we feel, which we have not realized the full potential, is agriculture. And East Africa is extremely important. In the next 10 to 20 years, India will be a large importer of agriculture products into India, which is amazing. And so we feel that is an area which needs to, and we have started looking at that. So that was one opportunity.
I think it's a very valid point you've brought to the fore. We're going to have to discuss it a bit further.
It's Mother Earth which is going to produce, and that's the maximum added value locally.
And we know we're going to face food scarcity down the line.
Coming to risks and this thing, we as Tata, I think, have said we will not be timid in our approach to Africa. And we have not seen, we've been almost over 2 decades in Africa. We've got a good footprint in 11, 12 countries now, and South Africa. If you are a genuinely good investor, and you mean investment and you are long-term, the leadership welcomes you today. That's what we've seen, our experience. And so, and there's no corporate crime in Africa, whether it's South Africa or rest of Africa. That's what I tell my board and investment committees, that nobody's going to say that you give me your investment. We've not seen that in the period we've been. We've only seen encouragement. So I see that if you really want to invest, you've got to come with your money, invest, and you're allowed to do business. And so the risk factor is the normal risk which you see in every country of the world. You go and invest in India, you'll have your risks there as well. You know? So those kind of risks do appear. But there's no, because we are very diversified in Africa also. Wherever we are investing, we're going into power, we're going into telecom, and these are big, large projects. So that's my personal view. I'm sure there are some risks which analysts
Tim, I want you to pick up on the potential risks of investing in Africa. What's the worst that can happen?
Well, I think that the downside risks that are of a long-term nature that people worry about starts with political risk and the changing jurisdictions that occur often in the African landscape. It's got much better, and there are a lot more democracies than there were 20 years ago, so it's moving in the right direction. But there are Malis in this world and the Malawis of this world, you know, where there is political change and a lot of uncertainty that goes with that every time. There's a lot of legislative and regulatory risk that the rule of law and the ability to understand what the policies are and to get policy certainty as investors in Africa is very important. So volatility around that and the lack of clarity does cause concerns and therefore risks from an investor's point of view. And I guess the third big one is the human resource risk. There's a real dearth or a lack of depth of resources that the world outside of Africa are used to in terms of actually running the operations that companies are investing in. So the human resource risk is a very key risk on top of the other two.
Are there risks dissipating?
Well, they are to a certain extent, with a lot of well-educated Africans coming back and, you know, looking for best talent around the world rather than limiting it to certain countries. But I do agree, human talent is one of the biggest risks we face as a company when we do a lot of investments in Africa. But nevertheless, you still have the other business risks, which were talked about, looking for information, you know, on certain markets. There's a scarcity of information. There's also the weak supply chains, poor infrastructure. But nevertheless, you have to see that as an opportunity rather than a negative. One of the key stories I always tell about Africa political risk is there's a company listed in London Stock Exchange. It's called Patterson's O'Connor's PZ. They make imperial leather, and they've been in Nigeria, which is one of the riskiest countries in Africa by perception. They've been in Nigeria since the 1800s, so they've been through the political coups, the change in governments, and so on and so forth. And therefore, you know, what we find in Africa are monopolies or duopolies operating, especially large corporates, that have been operating in Africa for many years without telling the good and positive stories about Africa. Absolutely. And they operate at extremely high margins, and so it serves them, you know, well to keep that status quo.
Absolutely.
Is that an incorrect perception that Nigeria is the riskiest country on the African continent?
I mean, it is a perception, but of course, you know, I think Nigeria has its own risk. You know, when I look at it, I think the whole issue about business risks or investment risks, you know, you've got to look at it from a risk-adjusted return perspective. In the very old days, the critical risk was risk of nationalization. That's no more what people are talking about now. Even when I look at the context of the inconsistent policy framework or even the unclear regulatory territory and all of that, you know, when you look at that, you know, is it really bigger or much worse than the risk you face in other countries? And when you look at the risk and returns, right, you know, you've really got to be able to make a very, very strong business decision as to, you know, what's the right approach. And from our perspective, you know, over decades of, you know, advising quite a lot of companies, we have found out that, you know, there's some key strategies that have really worked well, and a lot of companies that are very discerning, you know, are adopting continuously these strategies, and they are, you know, churning out good success stories. I'm also not going to undermine the point that he made about the fact that there are many multinationals in Nigeria and in many African countries. You know, they are enjoying it, you know, they are booking the returns, you know, but they're not very forthcoming in telling the story to the outside world. Why would they? You know, they like to keep the status quo. You know, so from my perspective, those 5 strategies have really worked well. The first one for me.
Before we go into those 5 strategies, Tim wants to add.
I want to add to what Duff was saying and say that risks can be mitigated. And so we often talk about the complexity of doing business in Africa, and we did a survey of corporates last year, and all of them, 66% of them, or 2/3 of them said, well, it's got more complex. And when I look at that, it's because they're really getting granular understanding of what it's like to do business on the ground in Africa. But it can be mitigated so long as you've got local presence on the ground, which is really what you were talking about earlier. And for example, from a KPMG point of view, part of our strategy, because we're also a global corporation, is we're investing $60 million over the next 4 years, which is essentially putting people, in addition to what we've already got on the ground over the last 100, to actually create capacity to actually deal with the complexities of on the ground, that clients of ours are really searching for answers to complex questions.
How are you creating that capacity on the ground in the chosen African countries that you play?
In terms of manpower?
Are you actually buying opportunities, or are you building from the ground in terms of manpower?
Yeah. So far what we've done all the projects are greenfield, what we've done in Africa. Yes, going forward, we are looking at acquisitions. And there are business risks are there, and we've seen them as challenges, some of them, like manpower. What we've done, every venture we've put in South Africa, if you see, we've actually opened up a training school for that before where the venture came, got underway. So that way we've created a workforce. So we haven't not been taking workforce from others. For example, in the telecom sector, or when we put a smelter in Richards Bay, we had a training school while the plant was being built. So that's the approach we've taken. And so we've got so those kind of risks can be mitigated, in this fashion.
Just very quickly, one more comment on the human capital risk and how you can overcome that in the private equity space.
Well, we look for the best talent globally. I mean, for example, our business in Nigeria, which is Helios Towers Nigeria, we just recruited the former CEO of Reliant Towers to run that business. So, what is really important to us is operational leverage and operational talent to gain those alpha in investing. And we don't care where the talent comes from, as long as it's the best talent we can get.
Tim, we are drawing to a close on the first half, but in your opinion, before we go, the biggest opportunity that you see, just to close off this session?
It's very difficult to say which is the biggest, because it depends on who you are as a corporate and what your focus area is. But I think that the new uncharted territory, which is a common area of interest across Africa and across the globe, is actually in agriculture, which is a surprising development. And it's around the fact that 60% of the global uncultivated land is in Africa. And we've got the 7 billion population you were referring to, Bronwyn, that really needs food security. And I think that that's the next wave that companies around the world are showing a lot of interest in.
And it's also, private equity funds have also taken an interest in that. There are about 3 new private equity funds focused on the agricultural sector in Africa.